Hi, welcome to this video day, 24th of November, it's Sunday. This is our weekly overview of the Forex markets. Now, in terms of good risk to reward trading opportunities, we see plenty to focus on next week. Now, in terms of, before we go and look at the charts, we have had very low volatility in Forex markets, particularly over the last couple of weeks. All traders have been saying to me, is this ever going to end? Oh, it will end. And it will end dramatically with high volatility. Now, in terms of the warning signs, they're already there. Now, in terms of you're looking at the Forex markets, you want to keep your eye on what's going on overall in financial markets, particularly in stocks, because stocks will have a big influence on where the Forex markets go in the coming weeks. I think we could be on the verge of a massive profit opportunity. Low volatility is not going to last much longer in our view. If you're prepared, then you'll catch, in my view, possibly some great trades in the market. Now, what we will do is we will go and look at the charts, but just before we do so, please do keep in mind, it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can get live access to our member center on the link beneath this video. Right, let's go take a look at some potential trade setups just for next week. In our member center, we use the charts from here. Just updated all of them for the open of business on Monday. But before we go and look at the charts, just want to explain very quickly to new viewers how we do our analysis. If you're already familiar with the way we do it, then you can just skip forward the next couple of minutes. Now, in terms of all the charts you're going to see, they're going to be daily time frames. That's the time frame that we work off. We don't drop down to lower time frames. We just consider that trading noise. Now, in terms of our charts, very clean. We do not want many trend lines. We only want areas of support and resistance, which we consider are important to big players in the market, where there'll be big order flow around them. To find those levels, we'll use the weekly and monthly charts, see if the levels back up the daily charts. If they do, that makes them more valid. And we'll also do a study of sentiment. We'll do our own sentiment analysis or use our favorite tool in Forex trading for measuring sentiment, which is COT, net traders positions. If you're unfamiliar with this tool, great tool in terms of helping you detect turning points in advance or postulate how far a big move might run in the markets. It gives you actual real money positions of two groups, speculators and commercials. Commercials are smart money. The two groups diverge out. We want to go with the smart money. There is a free video on our channel called COT Net Traders Indicator if you wish to learn more about it. Now, when we're trading the markets, we are on the daily time frame. We're not after any moves less than really 200 pips, preferably 300, 500 or more. Of course, there haven't been too many of those moves around over the last few weeks, but they're going to be coming back. And some of the trade setups we're going to look at, in my view, look extremely good from a risk to reward point of view. Now, to understand what's going on in Forex markets, what we need to do is go and take a quick look at the stock market to give us the big overall picture. So let's go quickly take a look at stocks. All right, S&P 500 daily chart, and it's important to understand what's going on in stocks, to what could happen in the Forex markets. We know we've got low volatility in Forex pairs at the moment, but what we're not seeing is risk currencies powering higher on safe currencies and benefiting from stock market strength. So you'd expect, any commodity currency to be going up on, let's say, the safe haven USD and JPY. It's not happening. The correlation has broken down. Now, this market technically looks quite strong. We break out to multi-year highs and keep going up for the last few weeks. But who's enthusiastic about this market? No one I know. It doesn't reflect, the health of the global economy. And what you're seeing, and it's quite marked, is a drop in volumes. And low volume rallies are very prone to big breaks. So if we break significantly lower, the safe currency is going to go up, and the risk currencies, if we grind higher, Well, the risk currencies aren't going up and safe at the moment. Just see the safe currencies remaining firm. But I think the odds of a breakdown are high. And you can look at the declining volumes in terms of the notes I put down here. Investors pulled approximately 3.4 billion out of mutual funds, exchange traded funds that hold US equities last week, extending the largest outflows from US stock markets in more than a year. Outflow 7 of the last 8 weeks and a total of 129.7 billion. Okay, so your man in the street, your average stock investor is not enthusiastic about this rally. They're taking money out, and stock volumes have really declined. And here you've got another note. Stocks volume 90 days has fallen to a 10-year low. Stock volume just 7% of total market capitalization during the last 3 months versus 21% average volume between 2010 and 2013. Now, the problem with low volume rallies is if the volumes aren't there, eventually it kind of just stalls and then just falls very hard. It's like a vacuum. I don't believe there's big money on the sidelines waiting to buy the dip. And also, big banks are not providing liquidity in the market to any great degree at the moment. So it's a dangerous market. It's rallied on optimism, apparently, about US China trade talks. How long is that going to continue? We've seen that power the whole of this move up. I just feel if stocks continue the upside grinding, risk currencies aren't going to gain. Also, a big breakdown, though, are high, and that's going to trigger really big volatility in the Forex markets. You've got it's really odd. You've got a stock market that's made several new multi-year highs, but your man in the street just isn't enthusiastic. People are nervous about what's going on in global financial markets. It's not just stocks. The whole global economy is not doing well. There's going to be an explosion of volatility in the Forex markets. In my view, it's going to come pretty soon. Now, just what I'm going to do is look at the dollar index, which is really the dollar, just a general kind of indication of dollar strength or weakness against major currencies. We dipped down here, and that was basically on the idea that Fed cut rates, which of course they did. Kind of double bottom through the 20-day moving average, finding support at the 20-day moving average, and pushing off on Friday. I think, dollar weakness, is basically ending. The dollar is probably going higher. So is the yen. Any safe currency on a risk currency, in my view, is probably going up longer term. And I know volatility is low at the moment, but just be very alert for a big move up next week. Right, what we're going to do now is going to go and look at some Forex pairs, and we're going to start with the majors and Euro USD. Right, Euro USD first of the pairs we're going to look at, and in terms of this pair, historical low volatility in the pair. My own view of the euro, it's been the same for months, is that it's got a lot of downside and upside is limited. We had a nice move down there, then a rally, kind of double top here just below the 112 level, and we've sold 111.20. She's gone through the 20-day moving average, come back to test and poke through. Now she's on her way down, but it's only 100 pips profit. I just don't see much upside. I think the euro is getting ready for a big move to the downside. Kind of storm clouds are gathering for Eurozone. You saw poor data again last week. PMIs, for example. We've got a central bank that's totally clueless in terms of policy, negative rates and stimulus. They've tried that for many years, didn't work. They think it's going to work this time to stimulate the economy, which is almost in recession. Upside limited, a lot of downside basically, but not the fastest moving pair. I prefer the euro proxies to sell on the USD because the proxies, if the euro does break down, will move a lot quicker, and proxies haven't got much upside either. Not the most exciting pair, as I've said, but I expect something or move up in volatility shortly. So any stocks break down, that will really help, well, obviously push the USD up everywhere maybe could crank the euro to the downside. But yeah, also in the Eurozone, you've got a banking crisis. And you saw, I think it was Moody's, downgrade all German banks to negative last week. I think there's something brewing in the banking sector. We could see, default or something in the not too distant future. Anyway, in terms of the Eurozone, nothing really good going on. Limited upside, a lot of downside rallies are selling opportunities. Let's move to our next pair, which is GBP. Now, in terms of GBP, this was our big winner back in October. In September, October, we were heavily focused on buying the pound off the 120 level. We got that big surge up. I think about 500 pips out of that, but we haven't seen the pound do much since. It's just kind of coiled sideways. Have come back in at 128.30. That's where we are now. 128, solid support, goes through 129. Then I personally feel we'll be going to 132, then 140. The pound's still very oversold. Volatility low, points to a big move. I think it'll be the upside. This is solid support. I've got our stop tight behind the level. Okay. If we were taken out, we'll always reevaluate and come back through 128. I think in terms of the pound, still bullish on the USD, but much more bullish of the pound. And my bigger positions are held in crosses. And there's one cross in particular I really like the look of, which regular viewers probably guessed already, which we'll come to in a little bit when we look at some crosses generally. Now let's move to AUD USD. Now this is proxy risk on currency. So stock markets are going up, the Aussie dollar's going down. But again, the volatility pretty low, 68.80 in, 67.81. It's only 100 pips, but not much upside in our view. And I think this double trend line resistance, the 2-day moving average should hold. We do have the RBA coming up in the week ahead, so we might reevaluate into the RBA in case there is a bit of a bounce. Get out, we'd sell the bounce. We just remain bearish of the Aussie, bullish of the USD, but low volatility. Trade war optimism. We're going to get a deal. We're going to get a deal. Keep hearing it. Aussie isn't really responding. I don't think we will get a deal of any significance between China and the US. They're too far apart. Just feel, with slowing global growth as well. Aussie's very vulnerable to a big breakdown, but low volatility at the moment. Obviously, if stocks tank, so will the Aussie. If we do pick up volatility and smash through the lows, we're going down to 60 in my view. Next pair, USD JPY. This pair here, low volatility, but it's getting ready for a big move in our view. See the USD come up really nicely, then it's going to slap into this candle here, which I've noted in previous videos. Massive institutional readjustment of portfolio candle. Really big adjustment by institutions. I won't go into the reasons of why they did it. It's all to do with interest rates and so forth. But that candle is going to be very hard to take out. The tail top on a close basis. You've had a few bashes at it down below the 20-day moving average. Again, low volatility. But the yen holding up well everywhere. Number one safe haven, despite what's going on in stock markets. So this one could be getting ready. I think the way I'm looking at it at the moment is don't see much upside, but we've really got to get through 108. If you want a kind of, in inverted, safe entry, wait for 108 to give way. So this candle tail bottom here, if we get through there, I think we'll just motor down to chart lows, and then longer term looking for 100. Now, of course, we do have low volatility at the moment, but our point of view is going to change. I'll be very alert for a breakdown in USD JPY. JPY looks pretty good to us in a number of crosses as well, which I'll come to in a moment. But let's go to the pair, which my last video really focused on. I focused on it quite a bit over the last month or so, which is the Canadian dollar. It is a sell everywhere for us. Why? Well, we noted down here that commercial smart money really came in to buy the USD while speculators really sold it. The two groups went against each other. It's a 2-year extreme across the Forex markets generally. So we could get in with a nice tight entry off the low, 130.80 on this blue. Up we come. It's been pretty choppy, low volatility, but it's the best of the majors for us so far. Just over 200 pips. And yeah, saw a lot of people last week saying, Canadian data's pretty good. The central bank are not as bearish as everyone thinks. Yeah, Pollock said interest rates, that's the governor of the Bank of Canada, were just about right. That should have pushed the USD down. It didn't. USD's not far off its highs. And when people talk about potentially bullish news for the CAD and you don't see a reaction, i.e. the USD isn't going down, good news in the price. Yeah, Canadian dollar is so overbought, going higher. We break above 133.30 next week. We'll be going up, I think, to 135. You can see my notes up here. I'll put 133.40 in there as well. I'm not interested in that level. It's just here. I think I'll just break. I'll correct that from Monday's update. 135, then 138. A little spec stop still to be hit. Good few have been hit here. More to come. Also, obviously the CAD is a risk proxy currency like the AUD, but crude oil. Crude oil has held up really well. I'm looking for a big breakdown in crude oil, which will not only hurt risk currencies generally, obviously it'll hurt the petro currencies like the CAD. CAD sell in a number of pairs. It's our major exposure. We're going to look at more CAD pairs in a moment, but I'm going to look just very quickly at two crosses. One of them is a potentially big trend about to start. It's been one of our favorite trend following trades over the last year. So let's look at some crosses, and the cross that's been one of our favorite long-term trend trades over the last year is regular viewers will know it's Euro JPY. So let's go and take a look at it. All right, Euro JPY daily chart. In terms of the Euro JPY, for well over a year, it's been one of our favorite long-term position trades. It did have a decent rally recently, though. You can see it here, and that did stop us out for a loss in Euro GBP. We're back in. We've got about 100 pips profits. Most of that loss is back, but if we take it over the last year, actually it's a little bit more than that, done very well. I just want to show you the monthly chart just very quickly. Euro's gone down, but you do see little rallies in between. But the bigger trend is down. You've got decent rally. It's fading into the 121 level. 4 bodies, 1, 2, 3, 4, tail, body, and now we're red. And as you got up here, and you can see the momentum kind of wanes, struggle to get higher, break below the 20-day moving average, back to test it, fail, finished at the low of the day on Friday, going down to 116, then 100. You can see where I've got my ultimate level down there. Could run even lower. You do have a level in between, which is 110. Obviously 100 is longer term, but this pair, I've got a feeling it could get down to the 116 level pretty quickly, and rallies into these two trend lines should fail. JPY getting very bullish of it. Risk on the JPY holding its own. Next pair is a GBP pair. It's really a lesson holding a big long-term trend, and it's Euro GBP, and this pair 89.80 in, so here, and we're down at 85.82, so basically 300 pips. But in terms of the way we've been playing this pair, we actually sold it off this double top, took it all the way down, came out at 89.80 on that candle there, waited, resold, and basically an 8% move. I still think there's more downside to come, but I've actually cut my position now in this pair. It's small. I will add if we break the support at 85 for 80. If we rally, I'll probably add there as well. UK economy is doing better than the Eurozone's, better interest rates. and the pound's still deeply oversold because of Brexit. That's the only thing that pushed the pound really down, wasn't it? And yeah, I don't care if the Conservatives win or if the opposition win. We know that the chances of hard Brexit are low. Yeah, they said, last week, UK economy had really bad data. It didn't really hurt the GBP too much, and it was expected. Yeah, GBP is going to continue, longer term to push the euro down, but my position is cut in this pair for the time being. And it's my major weighting, it's my major trade actually, has been for a good while. I'm going to go and take a look at it now. It's GBP CAD. Right, we're on GBP CAD. In terms of this pair, I've said it in previous videos, GBP for us is still the most oversold major. COT net traders positions are reinforcing our view that the CAD is the most overbought major. So it's a good one to focus on long term. We've been focused on it since it came up back above the 160 level. It's been quite an erratic move higher, but it's a good 1,000 pips. And I said it last time we covered GBCAD. We haven't got all of that, but we've got well over 700, and we're seeing a little bit of a dip in the GBP. So we tried to get above 172 there, failed. Come back through 171, okay? But this is really strong support, 170. So got the stop at 169.50. We're in at 169.30. So if we get stopped out, just be a minuscule profit. But I just think, this level will hold, and you could key off the level for longs on strength, or just take her back through 171. I wouldn't wait for 172 to give way, and I think we'll be pushing up a long way. I'll put 190 as my ultimate target, which is basically a retracement of the whole Brexit decline. You've got 180 in between, obviously. I'm taking a very long-term focus in terms of this pair, but this is, real favourite of mine. It's done well over the last few months. I'm hoping that's going to continue. So yeah, really good long-term one to focus on in my view. Let's go look at some other pairs. This pair interests me. I did a video on it recently. If you're a long-term position trader, this pair looks really good. It's USD SGD, or US dollar against the Singapore dollar. Very, very correlated with trade optimism. Optimism about a deal. The dollar sells off, but she sells off into major support. The major support holds. We come above the 136 level, 20-day moving average, and we're pushing away. Any blue next week through that tail, we should see us move back up to chart highs, and I'm looking longer term for 144. Singapore, not in good shape at the moment. It's a gentle moving pair. It's not the most volatile, but from a risk reward standpoint, if you're a trend follower, this one looks a really good one. So on strength next week, any blue, I think will be going up. It's just, I like it, when you go through a 20-day moving average, you're always looking for the kind of break or hold retracements once we're bullish. Holds quite nicely and just pushing away. I like the look of it. What do we got next? This is another good pair actually. SGD JPY. If we get some risk off, obviously, SGD will be going down, USD and on the JPY. And this level of resistance here was taken out, and then we fall back through, testing the 20. It's holding low volatility. You can see it on the bands, points to a big move through this level here. Higher volatility, I think, pushes down 76. Longer term, very much longer term, 55. Okay. But really good risk to reward trade. Might even split if you like, following long-term trends. Half USD SGD, half SGD JPY. Singapore dollar going down. What have we got next? A euro proxy, and I really like the look of this one. Proxies, they obviously move with the euro, but you don't get the noise that you get in the euro because Obviously, a lot of high frequency traders, people hunting stops, don't get that in the proxies. USD PLN basically falls hard, steadies up into major support here, pushes above the 20, up, comes back, 20 holds, pushing up, bang, up to there, then on to weekly resistance at 420 is a long-term position trade. I like this one. I've got some, and I've got some USD Czech krona as well, which is a very similar trade setup. So we shall see. What else have we got here? USDs are. Again, this is where I think the USD could be firming up, even if you're not trading the ZAR. It's an emerging market currency with a good interest rate on it. And look at this. It's come back to test key support. This one's a buy on a breakback through the 20-day moving average up to 15.50. Longer term, way up it could go. You get a little bit of risk off. These are the currencies that get hurt. Okay, so another decent trade setup. Have we got anything else I want to look at here? This one here actually just shows you how the Forex markets have slowed up. It's kind of traveling sideways. This is NZD-JPY. Look at it, just no volatility. The band's really tight, warning of a big move. I personally think it's going to be to the downside in terms of the commodity currencies, though. The pick of them for me is CAD JPY short, because I'm just so bearish of the CAD. Right, let's go and look at a few more USD pairs and crosses that look interesting. So I'm going to go to my last page. We're going to be looking, some USD pairs first. First USD pair, USD CNH. I featured this in a video last week, and there was one the week before, I think, in terms of feeling the USD would firm up. Very influenced by trade optimism about the US and China doing a deal. And obviously the optimism pushed the USD down, but it pushed it to oversold. As we noted in our first video, we just want to come in very aggressively back through an outer Bollinger Band, which you can see there, get in, up, hits the 20-day moving average, comes back to test the psychological 7 level, then above and holding the 20-day moving average, get above there. We should go off to the upside. I've got a very aggressive entry, so I could bring the stop up. So we just really lose the spread for a small position. I like the look of this one because we could trade as high as 10. It could. The Chinese yuan is so overvalued. I think the optimism, big time about a solution to trade wars is over. So could be going up a long way to the upside. Let's go and take a look at the next pair that I want to look at, which is USD MXN, which is an emerging market currency. Now, when you look at the emerging market currencies, exotic currencies, they've got the real high interest rates on them. So they're more risk-on correlated than the commodity currencies, which don't. Okay, so normally you'd have a lot of carry trades if there's risk on pushing the USD lower. The Banitsko interest rate or Central Bank of Mexico, really good. Pick up a good interest rate differential, but you can see dollar comes down, she bases up through the 20, back to the 20-day moving average, choppy higher. It is choppy price action, but there's a record or near record number of speculators still short the USD. They're going to get run on stop, in my view. And if we pick up traction next week, up to basically 2020 and then up to 2050, which will be at the top of my computer screen. So in terms of the emerging market currencies, I really like the look of this one. But they start breaking down, or this one starts breaking down, you probably see the whole complex break down. So the ZAR will go down, the TRI will go down, the RUB will go down, etc. This one, I've got a position in. I really like the look of it. Moving to the next pair, USD CZK, very similar to USD PLN. Nice sell-off, down to major support, which is 22.80. We can get a nice aggressive entry in at 22.91, up through the 20, back to test it, nice and firm on Friday, although not too much volatility. Open up on Monday higher, going up to chart highs. I've got 26 longer term, very bullish of this pair, and we knock a minor profit. And that's the advantage of doing aggressive entries. So yeah, another good proxy. What do we got next? Entity USD is a bit boring, like AUD USD, sideways, low volatility. I think we're going to take out the 20-day moving average to really get motoring to the downside. Last USD pair is a swing trade I quite like the look of, which is USD SEK. And I view the USD as a really good buy if we can break out above the 20 in a double trend line resistance. What I like about this, USD naturally corrects, so as natural correction. We go up, kind of false breakout there. In terms of this candle here, that was to do with rumours about Nordic banks. I think if we break up next time, we won't fail. I like it, the fact this tail touches that tail, finish well off the lows, just below resistance, punch through. We've come through nice and blue. We should just gravitate right up to the high. So an aggressive swing trade, and this is a volatile pair. That's the last of the USD pairs. Let's go and look at some yen pairs. I'm going to look at two to finish off with. AUD JPY. Proxy risk currency, obviously safe currency. Come up, get through the 75 level, and can't hold above 75 through the 20. Down, can't get back through the 20. Low volatility, but yeah, it's only 100 pips so far. But hopefully this one becomes a big winner. We've got the RBA coming up. I might go out and come back in. I'll have to decide a little bit later. But yeah, long term, this one's going a long way to the downside. And my favourite sort of commodity currency to sell against the CAD, against the JPY is the CAD. And I've got quite a reasonable position in this, as well as Euro JPY, which I mentioned earlier. What I liked was when we came up here, nice and strong, through the 83 level. We take out these candles here. Big commercial selling, smart money comes in, speculators buying, can't hold above the level, down. Come back to try and get through 83. 1, 2, 3 attempts right on the level, can't do it, down. Test the 20, down. Might come back, test the 20, double trend line again. But this one for us, going a long way to the downside. 79, then possibly 70. So there's my review of pairs that I like, and obviously I'm getting bullish of the USD and the JPY, bullish of the GBP, obviously as well. I think low volatility. A lot of people say, "Oh, it's not going to end anytime soon." The way stock markets look to us, it's looking kind of dangerous. Could be a big breakdown. Volatility looking hopefully to increase in the Forex markets. I think, like I said, if stocks continue to grind up a bit, is that really going to hurt the safe currencies against the risk currencies? Well, it hasn't over the last few weeks. I mean, you never know what's going to happen in Forex trading. But looking a lot, liking the look of safe over risk currencies. Also, just my final point. We're in November now. We'll soon be in December. A lot of people say, "Oh, well, this time of year isn't great for trading." Trust me, it is. November can be pretty volatile. December is certainly always one of the most volatile months of the year. In fact, historically, if you look at it, from I think it's about the 20th of December to I think January the 7th, I think it's about 80% of Forex pairs form their high or low for the following year. So we're in the back end of November, coming into December, looking for hopefully some nice moves. We shall see, of course. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.